there.
Hey.
My question is kind of twofold. Before I listened to the webinar, my plan was to sell my house in a couple months. I owe about $200,000 on it, and then build a new house. The profit that I'm going to get from selling my house is not going to cover my new build, so I was going to do a construction loan. But now my only debt is my mortgage. So now that I've taken this class, I don't know if I should wait to build and pay down on the mortgage. That's my first question. And my second one is, if I were to start building right away, can a construction loan that rolls into a mortgage, can I use your process right away with a brand new mortgage like that?
Mm-hmm. Okay, so I want to make sure I heard her correctly. So she's going to sell her home.
She's still unmuted if you want to clarify.
Yeah, so you're going to pocket $200K from the sale of the home, or you're actually upside down, meaning when you sell the home, you're still going to owe them?
No, not upside down. I owe $200,000, and I could probably sell it around $500,000.
Oh, okay, so you're going to pocket about $300K, minus closing costs and realtor fees and all that. Okay, and then of the $300K, you're going to dump some of that into the down payment of building a new home, correct?
Correct.
Okay.
Yeah.
Here's what I would do. Construction loans, I would say lower end down payment would be about 10%. What I would do is, let's say you're building another $500,000 home. 10% is $50,000. I would put $50,000 as a down payment, hold on to $250,000. There's better places that you could put it right now, earn some interest, and then get a construction loan. The question is can I do a HELOC construction loan versus just a construction loan? Believe it or not, there's a few. There's not many. There is a few. We know of one bank and credit union that will do a HELOC or line of credit type construction loan. I am skeptical on that one of how beneficial it is, because typically when you're building a house, except for me, it took me 2 years, it's about a 9-month to a 12-month process, right? And a construction loan is interest only. So let's say your first draw is $100,000. Well, you're going to be paying interest only on $100,000. Then you need to pay another $50,000 for something else. Now you're paying interest on $150,000. So it's draw based. You don't start off saying this is going to be a $500,000 build, and you start off paying interest on $500,000 like you would a traditional mortgage.
Right.
But believe it or not, there is some lenders out there that will do a line of credit type construction loan. I don't see the massive benefit in that, to be honest with you.
Yeah.
Now, does it hurt you? No, it doesn't. I could see, during that 9-month to 12-month process, you got a place to park your money and reduce the interest on it and so forth.
Oh, yeah,
but
sure.
Yeah, it's not gonna be huge.
Yeah.
Let's put it that way.
The question that I would ask is just, did the calculator say that you were qualified? Is your credit score above 700? Any, disqualifying marks with short sale bankruptcy, short foreclosures last 4 years? If not, it's a great question, but that is, again, what part of our process is on the backside of becoming a client. We're going to sit down with you. Again, on the front side, we just want to make sure we can help you. On the backside, you get the custom plan. You get the sit down. We're going to, again, once you go through the education, and we're gonna develop that plan of attack for the best case scenario. Hey, this makes most sense for you, right? Whether that's a construction loan, HELOC product that we do know of, or whether that's, hey, maybe you do need to start with a mortgage, but we're gonna work with the personal line of credit and show you how to chunk away at that until it makes sense to go into like a first lien HELOC.
I also forgot a very important part, and my team just notified me too, is at the end of, because a lot of construction loans will mean that you have to do something with it, that at the end of the construction period and you've got your certificate of occupancy, now you have to do something with that construction loan. Most people convert that to a mortgage. You do not have to do that.
Right.
You can actually convert the construction loan right into a home equity line of credit. And what's kind of cool about that is, if you look at the hundreds of banks that we do business with or have a relationship with, I would say 10% of them, maybe less than that, will do a purchase. But when you're doing a construction loan to a home equity line of credit, it's a refi. So now you have a lot more options than those that are just looking to purchase. So you already own the property, you got a construction loan, you're building the home, you got your certificate of occupancy. Now it's treated as a refi, which means your options are really limitless at that point.
Yep.